Hello, today is Friday, November 26th. When you get a holiday like this on short weeks, this tends to happen. I'm kind of laughing under my breath because it's never fun. But when you have bad headlines and the market doesn't have institutions there to really support it, meaning, let's be real, a lot of institutions are in, but a lot of the traders are not going to place positions on dips like this because they're just not even there. Some are, but they're just not going to make any big moves because there's just not a lot of volume on days like this. So when you don't have the support there, granted, that's a bad headline that we had on the COVID news, but I do think we are close to a bottom. I'm not going to call or predict that, but I do think that there is support close, which makes me feel a little bit better. Okay, so friendly reminder that this is for informational purposes only. This is not advice. This is mainly for clients to keep them aware of what I see, what I'm doing, the moves that I made during the week. So it was a difficult and choppy week, and we're going to walk you through. First of all, here's the week performance. Okay, these are the indexes. Clearly, the Russell 2000 led the way down, and that's kind of what I've been watching, is to say, can we get strength in the beaten down areas? And the answer has been so far, I'll show you in a second, no, this is not good. Now, we did get a nice little boost at the end, and we are getting oversold, so we're seeing some good things here. I mean, again, a lot of times where IWM or the Russell 2000 has made a rebound is just a tad below the 200-day moving average. Consistent all the way through here. Now, am I pressing hard here? No. On Monday, I reduced to 96%. On Tuesday, I reduced to 44%. So I've been reducing hard, because I truthfully did not feel good going into a Thursday that was going to be off while global markets were kind of in a weak spot. That was the decision I made. Now, to be honest with you, on Thursday, it did not feel good to me because the market actually went up to 47.20, and I'll get that chart up for you. Yes, right here, 47.20. Overnight, it's not going to show here, but it did go to 47.20 overnight Thursday. Wednesday night. So we rallied. It's a fake a full breakout, fake breakout here, and reversed hard Thursday. Not fun. It's mean price action, but that is truthfully why I made the decision that I made. I'm not a rocket scientist. I don't get them all right. It was a decision to say, hey, participation is weak. Make sure you're taking some gains and don't get too greedy here. That was all it was. So now I'm 44% invested in only the S&P 500. So I'm not getting killed. This week, the average account was down 1.33%, while the index was down about 2.2. So I am playing defense, but I do want some invested because I do think we are closer to a bottom here. Okay. So again, major averages, ugly week, but the reality is most of this did come from day. So I'm going to switch this. This is weekly, daily. Yeah, you're seeing where most of the dip came from. And unfortunately for a lot of people, this happened overnight. Not much you could really do unless you took gains earlier in the week, which fortunately we did. So we have a lot to add, which I feel good about. It was a tough emotionally to see the market just tank like that, and having zero control. That's why I don't like short weeks. They shut you down early, which I'm fine with, but when global markets get a headline like that, there's not going to be enough that can hold it up, especially if U.S. indexes or U.S. investors are not there to really push it. You know what I mean? So it's tough. It was a tough week. Industries, U.S. industry indexes, ugly. Sectors in general, ugly. But again, like I was pointing out earlier, most of this is truthfully from the day. So really, We were not in a bad spot whatsoever. We were basically positive until today. And that's hard to stomach, but at least we made the right decision in reducing earlier in the week. So pros, cons, there's not much I could do about it. I'm sure you could always look back and say, I wish I went to 0% invested. But at the time, I wasn't seeing the risk reward to do that. I'm just glad I went to 44%. Going into Monday, we were 133% invested. So we made some difficult decisions very, very early in the weakness. So now let's get into the breadth. This is really what I wanted to show. Where are you at? There we go. Okay, here is the main index, the S&P 500. You're like, all these lines drive me nuts. I get it, but here's the deal. The main thing I want to point out is I do think that it is very possible that we test this breakout. So here's the previous high. We rallied like crazy. A lot of times you back test this. And I do think that this would be a very good entry at 44.50. Below there, you have several gaps. So I hope that doesn't happen. If it does happen and we tread below that, it's out for me. But I do think if we get here in our oversold short-term and medium-term, I think people will probably say, if things are okay, really I don't think the news is that bad in the United States. It's the Eurozone and Asia markets that are really forcing U.S. hands. Our indexes are not as bad as some of the other global indexes, unless you're talking the Russell 2000, which has just been a mean area to be in. So there's the indexes. Again, we made trades at 47.40. So on this day, very, very close to the peak, took gains, very fortunate, feel good about that. Took gains at 46.72. That was on this day. That was this trend line right here saying, I'm not seeing it. It went down to 46.50 and it rallied. This is what happens a lot of times in short-term downtrends. You retest the top and go down. Now, would it surprise me to test 46.25 or 46.30? No, that might happen early Monday, and we'll see if there's any strength. This very well could get to 46.50. That's a big level. So we might retest that before. We may never test this. So it's possible that we just go from here. But I think this would resolve a lot of naysayers at this point if we tested this and rallied hard. I think it would bring in a lot of people. So really, I'm taking what we're seeing worth a little bit of a grain of salt, because I want to see what happens when institutions are in and what they do as a result. If they sell, we get out. But really, I'm not sure we get the full picture today. This was retail selling, and I'm not sure we're really in full fear mode yet. I'm seeing a lot of fear in the VIX. Put call ratio is definitely going in the right direction. So I'm seeing fear is what I'm saying. I want to see that fear. So there are some things that I like. I'm liking that the chart looks similar in IWM to placing in a bottom. But I think we need some time. I think we got to be a little bit careful adding too much here. But I do think we're in a point where I can slowly start to add. I chose not to today. Actually placed an order, but it was too late. So that got rejected, but the market tanked after that. So I'm like, I'm all right with that. So we're not in a bad spot here, but I want to show you why I decided to take some gains Monday and Tuesday. Number one, this is not good. This is the NASDAQ versus bonds, 30-year bonds. So the ratio is going down, meaning people are buying bonds. When you see that, you got to be a little bit cautious, okay? So that's one concern. But again, all of this leads to good things, good buying opportunities, so don't get too negative on any of this. We are way down here on the equally weighted S&P 500. Like most people have been saying, you probably understand, is the market has been held up largely by a few stocks. Okay, that's somewhat true, somewhat not true. I get it. Let's just go with that for right now. But this just shows how bad it actually is for the equally weighted areas. This is not what you want to see, but it did kind of hold a key area. So again, we're seeing it's ugly, but could this be near a bottom? That's why I need to have some exposure, in my opinion. That's where I stand on that at this point. McClellan index going in the wrong direction. You want to see this curling up, and it very well could soon. I hope it does, and it may require some time, as you can see here. But you can see here that this can go down for a long time. The S&P 500 be fine. Now we're to a point where we were at all-time highs, and we actually followed it closely. So I actually feel a little bit better about that, rather than feeling nervous about, hey, indexes are extremely overbought here and we're not following the general market moves. That's a concern. So we're actually following that, which actually makes me feel a little bit better. So again, positive and negatives, take it as you wish. NAM exposure still pretty high as of Friday. That doesn't surprise me. People are taking a lot of risks still, which is okay, but you teach their own. Divergence checkup. This is the big one. Not this one, but this one. Okay, so divergence is basically saying, what is the index doing, and what is the entire New York Stock Exchange and other indexes doing at the same time? So when you see this, you don't want to see the percentage of stocks in the S&P 500 below the 50-day moving average going down. That leads to things like this. Okay? Also, at the same time, New York Stock Exchange above the 50-day moving average was declining. That's not what you want to see. In short, all of this is just showing risk reward. It does not mean that you cannot see the market do well during these times. You just have less you have less odds of picking the right areas to do well. So fewer and fewer areas are giving you just not good risk reward. Okay. So in short, we finally gave way. Breadth was showing concern. Number of participating stocks was showing concern, and we finally gave way. Okay, so I'm being real about that. I see the concern. Now, it'll be interesting to see next week what happens. Again, the area that I am watching is right here. It may never happen. It would drive bears, people who are negative on the market, absolutely insane if we did not test that level and we just rallied to new highs. It very well could happen. Okay, so one more chart just to kind of show you one thing that I do like that I'm seeing, pros and cons of course, is the VIX starting to really curl up, meaning there's a lot of fear, a lot of volatility. That's not a bad thing. You want to see that fear. But eventually, we're going to need this sucker to calm down and get back under 20. If that happens, it usually means less volatility, and hopefully by then, areas like the ARK funds, which I am not participating in, but they are getting smacked. Hopefully IWM or the Russell 2000 gets going. I think personally that we will go as IWM goes. Once it started to rally a little bit, we started going a little bit. But once it tanked, we started to follow. The other indexes started to follow. So this is interesting. I do wonder if we might see a little bit of a give back like this on Monday. And maybe we go. It's pretty oversold. Like if we're looking at this, that's pretty oversold. It's getting, now that's a big volume. You don't want to see that. It's selling on big volume, which usually happens. So I think we're close. I really do. And if not, pretty simple. If we lose this level right here, all the way across, if we lose that, 45, watch out. That level for this week was 46.50 was the level for me to say, watch out if we go below that. Fortunately, happened overnight. What do? Pray that you made the right choices earlier in the week. Fortunately, we did okay. Not perfect. So that's the end of the video. We're hanging in there. I do think we're close, but you can see why I want to have some on. I think 44% is the right mix. It's not crazy risk. It's just in the S&P 500. And if we go lower, I slowly start adding at key levels. There is a level at 45.80, which we got very close to touching after hours. But it very well may require this 45.50 level touch. Okay? So have a great weekend. It's a tough week when this stuff happens. I wish I had more control of when the market was open during holiday weeks, but this sometimes happens. I have to accept that and say, fortunately, we reduce risk hard going into what I thought would be a volatile week. It's been very, very tricky. But overall, not getting a lot of participation was what led to me making some tough decisions Monday and Tuesday. So have a great weekend. We'll be all right. Hang in there. See you guys.